Welcome to this Forex Preview video here at xm.com. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyadjian, and we'll be having a look at U.S. data coming up this week. Rafi, it's going to be a crucial week for the United States on the data front, as CPI inflation numbers and retail sales for March are coming up on Tuesday and Thursday, respectively. The argument is that this data set might tip the scales for the Fed to take aggressive action in order to cool an overheating economy. What are we likely to see in the numbers? And could that mean we will see a 50 basis points rate hike at the next Fed meeting in May?
Well, Christina, we're expecting another staggering inflation print on Tuesday. So forecasts are that the headline inflation rate in the US will rise to 8.3%. So that would make it another 40-year high. The core figure is expected to rise to 6.6% in March. So we're seeing no end to this surge in inflation. The retail sales numbers will probably also be equally strong. So retail sales probably rose by 0.6% in March. So that's double the pace that we got in February. So clearly, inflationary pressures are not subsiding yet in the United States nor elsewhere. So the Fed was hoping these price pressures would be transitory and inflation would start to peak at some point in the spring. But the Ukraine crisis has created an even bigger price shock to the global economy than the pandemic and the lockdowns did. So the Fed not only has no choice but to respond to this surge in prices, it's also well behind the inflation curve. So it's probably going to try to play catch up in the next few meetings. We've already seen policymakers steadily become more and more hawkish. The latest shift came in the minutes of the March meeting we got last week, where there was another signal that the Fed will hike interest rates by 50 basis points at the May meeting. We also got the first details about how quickly the Fed will reduce its balance sheet. So we're now seeing the Fed press hard on the brakes to take the steam out of the US economy.
Now let's have a look at the greenback, because the dollar has reclaimed its mighty rule in the FX market recently, especially against the yen, which has slumped to multi-year lows as rate differentials widen to its disadvantage. Given that markets are already pricing in a very hawkish Fed moving forward, how much could the dollar gain on the data this week?
Well, that is a really good question, because the dollar has already gained so much, both on the back of strengthening rate hike expectations, as well as from the flight to safety triggered by the war in Ukraine. Given that the Fed is now among the most hawkish central banks around the world, the dollar should remain elevated, but it may only be able to post modest gains if the data is better than expected, unless, of course, there is another risk-off episode in the markets. So the fact that an aggressive Fed has already been priced in, this does leave the dollar slightly exposed to downside risks if the data is not quite as strong as expected, because this could trigger some profit taking.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview on US data coming up this week here at xm.com.